There's a lot of unhappy people in corporate America.
I think
there's
so.
a lot of people who reached out to me like, hey, I love what you do. I would love to do the same. I want to build cash flow. I'm tired. I'm tired of sitting in meetings all day. I think authenticity is the biggest asset in social media. I think there's way too many people who portray themselves as something that they're not. And that might have been okay for a while. You might have got away with it. But I think people just getting more and more tuned into like, okay, who's real and who's not. The assumption is the economy is doing really well, unemployment is low, and the Fed is wrong by lowering the interest rates. And trust me, there's a lot I disagree with them. I think fiat currency, printing of money, is one of the evils of our society.
All right, well, let's kick off another CashFlow Quest. We have an awesome guest coming to us from Florida, virtual, Marco Pfeiffer. Welcome. We're excited to have you on, and I love your hat already. I can tell we get along just by your hat. And we're excited to have you, brother. So thanks for joining us.
Yeah, no, excited. Same here. Really looking forward to this one. Trying to make a fashion statement, so just to set the stage.
Let's go.
I love that. And for all of the listeners who aren't maybe watching, it says #end the Fed. We love that. Yeah.
Yep. And we got some new fun pressures on the Fed, and Trump, and there's some interesting things going on in the realm of central banks.
Oh my gosh. Yeah. Lots to talk about.
And it impacts us in real estate, so a lot of people do not understand. I think they don't understand really Fed policies and the impact on real estate. I mean, everybody knows interest rates up and down, but there's way more to it than just setting interest rates.
Amen.
Yeah, for sure. So before we jump into some other questions, can you tell us a little bit about yourself and your background? Where are you from originally?
Okay, so originally I'm from Germany. I was born and raised there. I was 26 when I came to the US. Classic American dream. So I'd never been to the US. I didn't know anybody in the US. I had $1,500 in my pocket, 2 suitcases. And I barely spoke English.
Wow.
So, I had school English, but it's not comparable to the way I speak now.
Reality.
So basically, came to the US, started as a financial analyst working for a German company, worked my way up. So switched companies at one point for several times. And then within 10 years, I became chief financial officer of a $150 million company in Louisiana. Did that for a while. And in 2016, I became unemployed, and I kind of realized that I'm depending on a W-2, even though I was a chief financial officer, CFO, had a good salary. I was still okay, but I realized how much dependent I was. And I was unemployed at the time for like 4 months. And the goal was to develop some kind of cash flow stream that if I ever get unemployed again, I'm making whatever, $4,000 or $5,000, I'm going to be okay, covers my basic expenses. And from that, I went into real estate, went all into real estate. So for 4 months, started how to scale up, how to build it. Went back, found a new job as a CFO, went back, but in parallel, built a portfolio of single family homes, and also got into multifamily. And by 2020, I was making more, or had a higher income in real estate than I had in my CFO job, and retired from my corporate career at 45 years old. And since then, I still do real estate, not as aggressive anymore as I used to be. And I consider myself more of a lifestyle investor. So I like to travel. I like to do the things that I like, that fulfills me. And real estate allows me to do that. The income I generate from real estate.
I love that.
That's amazing.
Well, congrats. Just so we don't kind of gloss over it, congratulations on making that move and that transition. That's a huge thing that a lot of people talk about, but it's not easy to do. And so congratulations for that. That's really cool.
Yeah. And you figured it out. It takes, a lifetime to figure it out sometimes, but you're a kid still and you figured it out. So that's awesome. And what a story, coming from Germany and now into America. You speak great English, so you've done great.
I still have an accent, but at least I can communicate. Yeah.
No, I love it. And we pushed through that similar kind of thing. We had our father along for the ride on the kickoff because he was a tired contractor, and we were kids coming out of school and different. Jen and I were in different, like she was in college, I was in high school. We're coming out of it. We were missing school to go to like Rich Dad series education programs back in the day, you know.
That's awesome.
So it's the same kind of thing. So I fully get it. It's a big boot up on the front end, but then once you build momentum, it's like, oh, this is the magic.
Yeah. When you get a taste.
No, it was hard. I mean, I was a corporate warrior, so I worked 60, 70, 80 hours, you know, to begin with. And then you do real estate, going to seminars, reading books, getting coaches, taking action, taking massive action, you know, and then, I mean, you change your lifestyle too, you know. On the weekends, you used to watch football and you watch college football and watch NFL. Now you drive around the neighborhood and look for houses and you look for opportunities to grow, you know. So your mindset shifts, you know, and then you see what's possible. Yeah, like you said, it opens up so much. And so yeah, I mean, it's you invest that time, or it's hard for a while, but the benefits way outweigh what you invest. You know?
I couldn't agree more. And so our outcome, I'd say, just because you kind of have a similar background to pushing through that veil and getting to cash flow and becoming more and more passive. Let's go back for people that are, let's say, younger and or at that transitional point in their life and they want to go into cash flow. What was the fun kind of in the weeds? What properties, or the first kind of few properties or stories could you share to kind of show the ropes a little bit?
When I say I got into real estate in 2016, I actually was an accidental landlord already. I had one property, and unfortunately, I didn't understand what I had, so I never scaled up from there until 2016 when I realized what I had. So for my first, for my CFO job, I had to move. So I had a property in Huntsville, Alabama. I moved. I was like, okay, somebody's going to pay my rent. I cash flowed like $40, $50 on that property, but it rented quickly. That property I bought in January 2008 for $185,000. So if you pick a month, the worst months possible to buy a house, June 2028 is probably right up there. It was right before the big crash.
Yeah.
And that property I bought for $185. By 2010, it was worth about $130.
Wow.
But I didn't care. So I knew it was still paying my mortgage. I still believed in real estate. It's going to come back. And that property got appraised last year for $340,000. And it cash flowed the entire time. At the time, I was renting for $1,200, rents for like $1,900 now. It's been vacant for like 15 days in 15 years. Wow. And a great property. But it's where I'm going with that is you have to have a vision in real estate, and you have to look at it for the long run. I think a lot of people, they try to do the quick, they flip a house, they do this quick instant gratification. But I think you have to have in real estate a view and also be ready to delay gratification and build up in that. So I think that's the key, what I learned with that first property. And I still own it today. That property.
Yeah, that's so interesting. And I couldn't agree more, or hearing your story with you. I'm just curious for people who are listening to, with you being in the corporate realm and in a CFO position, was there something that triggered you to buy that first property in Alabama? Like what caused you to do that?
No, it was my first house ever. At the time I was 30. It was 33.
Okay.
So it was my first house ever. And I don't know if you know much about Huntsville. It's a military base, but it's more like not a typical military base, more like scientific. So the missile defense system and stuff like that is there. And the realtor I had at the time, he was like, yeah, if you ever move, it was right next to the military base. So if you ever move, you can rent this house in no time. And I figured if somebody pays my mortgage, in 28 years from now, that house will be paid off. That's great. So I didn't, like I said, I didn't understand all the benefits and whatsoever. It was just, it sounded like a good idea. Somebody's going to pay my mortgage. So that's
okay. I got you. So you live there.
The good and the bad thing. The good thing is I took the action. The bad thing is if I fully understood what I had and what I do, I would have started scaling up way earlier than 2016.
Yes. Yeah. Got it.
So you bought a house to live in at the time, and then it converted into more of a rental. And then once you got into the rental game,
well, you got a taste of that cash flow coming in from a renter, and then
I got a taste of cash flow. Understood the refinance. That's probably I refinanced 3 times since I have. So,
to pull the equity
constantly out, refinancing, cash out refinancing. So it actually fed. That property itself fed probably 3, 4, 5 other properties I bought just from that one property.
Well, and now you're probably sitting pretty with a crazy low rate.
Did you refinance?
It's in the 5 somewhere. So, but because I refinanced not too long ago, like 2 or 3 years ago, but yeah, still good.
Still a very good rate. Today, that's a good rate. Yeah.
Well, cool. So then what did you continue from there? So then what did you build kind of off of that?
Was it just one house up?
My first initial, like I said, was single family. So I built a single family, and I think the one, and this is 2016, 17. So multifamily syndication got really big, and I was kind of like a little bit contrarian. So I was multifamily too. I never did syndication. Anything I ever did in multifamily, I bought myself, or I did a 50-50 joint venture. But it was kind of, at the time, it was like, hey, get multifamily syndication, you got to scale up. You cannot scale up in single family. And I took the position that only you don't know how to scale up doesn't mean that you cannot scale up. And I think Blackstone proved the case in 2010, 11, 12, when they ended up with 50,000 single family homes were able to scale up. So I kind of looked at their approach, took an institutional approach to single family. Today, I have about 50 single family houses. Along the way, I owned about 150 apartment units, but I sold all that in 2022. So I got out of multifamily in 2022. Tried to time the market, did actually time it. Usually I'm not very good in timing at all, but this one I actually timed very well.
So you closed those sales when the interest rates were going vertical. You were able to get them closed before interest rates got crazy.
I saw what was happening. Speaking of the Fed and understanding Fed policy, so I saw what was happening. Interest rates were going up or about to go up.
Trending,
and obviously that has an impact on cap rates and valuations. And spring 2022, everything was still pretty hot. So we got unsolicited calls, me and my business partner, of people want to buy our assets. And we're like, okay, I mean, it's probably as good as it gets. And sold out those 3 assets, about 150 units, and sold out of those units. And it turned out the right thing. I mean, those assets are worth probably 20-30% less than what we sold it for.
We were active at that moment too, and so I fully understand the moment you're talking about, because the rates were ratcheting up crazy fast right then in 2022. So
the last one we sold we closed in August, and they struggled to close. The first 2, the buyers was easy, the money was still flowing. It was very easy to get the debt, but the last one was struggling quite a bit, and we had to reduce price a little bit, but it turned out on with the right decision. So today I still, like I said, I own about 50 single family houses. I do different things around real estate. So I do owner finance, I create notes, I flip occasionally to generate income for buying houses. So it's kind of a mix of different things all around single family and real estate.
I can tell you're very passionate about this, and I love it because we're very passionate about the real estate industry too. And so you started then Middle Class Rebel, kind of like coaching program for people to try to do this, or tell us a little bit about that.
Yeah, what happened is I quit in September 2020, and I made a post. It was my second post ever on LinkedIn, not active at all there, and I made a post about that I appreciate all the opportunity through corporate. I mean, I learned a lot. I traveled the world. I've been China many times, to Europe through my jobs.
Okay.
And so I appreciate the opportunity, but I just got tired of the corporate world. I got delusion. I mean, I just didn't enjoy it anymore. And so now I'm in real estate and I'm excited about the future and finally financially free. And that post went viral, even though I didn't have many connections. Went viral. Oh, for my standards, viral. And from there, I started posting about my journey, starting posting what I do, the deals I do, how I got here, what I learned about Federal Reserve, what I learned about interest, what I learned about mortgages, refinancing, whatsoever, inflation, and create a following. What I learned is that there's a lot of unhappy people in corporate America.
Oh, I think
there's a lot of people who reached out to me like, hey, I love what you do. I would love to do the same. I want to build cash flow. I'm tired of sitting in meetings all day. For me, what represents corporate America most is like when I think about those meetings I was in for hours, and then the only tangible outcome was, let's have a follow-up meeting. And you're like, oh, what are you talking about the last 4 or 5 hours here?
Right.
And that's one of the things where this frustration grew, and I was like, so many people. So I created this following on LinkedIn. People follow me, follow my content. It's not always the most politically correct content, but I think that's what people like about me. So
100%.
Speak freely, what I think is wrong, what I think is right.
Yep.
And from that, people reached out and was like, hey, can you teach me? Can you show me what you do? And I started creating a little bit of a coaching program. It's nothing I really advertise. It's more kind of like on demand if somebody reaches out to me.
Okay.
And I basically help people to buy their first rental property. So especially people I work with mostly are similar. They can't relate to my story. They're like manager, sales manager, accounting manager, or lawyers for corporation or something. And I take them from step to step to understand why real estate, all the benefits that come with it, the impact of how you can actually benefit from inflation through real estate instead of getting steamrolled by it, and then help them basically hold their hand, buying a property, negotiating it, renovating it, and then get their first rent check. And what it's more important is that it's cash flow. Cash flows from day one. So I know you guys are in California. A lot of people I work with are actually in California, but the houses I buy are most in the Southeast. So Mississippi, Alabama, Georgia. I used to buy a lot in Florida, not so much anymore.
The price has gone up over there, hasn't it? Yeah.
Yeah. So that's what I do. And
that's amazing.
That's how this whole grew. Yeah.
And so I didn't look at the LinkedIn specifically. So how many followers do you have on LinkedIn now?
I think it's close to 37,000.
Nice. That's fun, man.
Yeah.
That's so cool.
Good for you.
We were like just kind of getting into the social media realm and using this to kind of for posts and everything.
Yeah.
But I couldn't agree more that like you got to stick to your morals and your foundation of beliefs now more than ever. I feel like anytime I've actually just gone out on a limb and spoke my mind truthfully is when people resonate. Yeah. To your point. So I completely get it. Like what you're doing.
And I think authenticity is the biggest asset in social media.
Yes.
100%.
I think there's way too many people who portray themselves as something that they're not. And that might have been okay for a while. You might have got away with it. But I think people just getting more and more tuned into like, okay, who's real and who's not, and I think authenticity is a big deal when it comes to social media. And here's the other thing: I think a lot of also make the mistake they want to please everybody.
Yeah.
It's like, oh, you got to be politically correct. Don't want to say this, don't want to do that. Don't want to offend this guy or that guy. Or you want to make sure to capture your whole audience. You capture the one way over here and the way over there and everybody in the middle. And I think that's where people get lost.
Yeah, with the way of the
you
world.
You don't have to please everybody.
No.
I'd rather surround myself with like-minded individuals than having like a big crowd, you know. I mean, it's just, I think it's
well, and then,
yeah. I mean, it's not, you don't only do it for somebody else, you also should do it for yourself. So I yeah, like I said, I think it's more important in times.
Yeah.
In
especially
times
right now.
like
we're in the
around you.
Yeah, amen. And we're in the realm of noise now. So like actual real human connection, because you agree and understand things that are similar and have shared beliefs, that's way more meaningful and fulfilling than just being in the realm of noise. You know, like there's so much data now. Like I was just listening to like a Tony Robbins motivational edit, and it's like, he's like, we're not in the age of information anymore. There's way too much information. So now everyone's hungry for connection, you know, and actually authentically connecting and becoming real friends, real relationships. Because that's, I mean, the name of the game in life. It's not about just pleasing everybody and not actually having any friends. Like I've met like legit, you know, famous people in the realm of Instagram or whatever. I've met them and they don't have any friends. Because it's all this like more of a physical representation, and they're like basically a modern billboard where they model clothes or this or that or whatever, and they don't have any friends because it's like, who do they connect with?
Yeah.
So,
and I think the other aspect of that is like, you know, all this information coming towards you. We just want wisdom, and with personal connection, it's like wisdom and learn from other people's experiences. So like what you're saying with your videos, how you're teaching people about inflation or how to get out of this corporate world and into a cash flow, like people eat that up because you can't, there's so much information out there. It's like, how do you funnel this to know what's right, what's wrong?
I mean, if you, I don't know the exact number, but if I go right now on YouTube and enter real estate investing, I promise you there's at least 500,000 videos on real estate investing. And if you watch 10, you probably get 8 different ideas or opinions on how to invest and where to invest and whatsoever. And then, I mean, I'm sure you guys know some of those guys too. Half of them haven't bought a property in 5 years, and they just live off
social media stuff,
selling of clicks and selling programs and whatsoever. And some of the stuff they teach is archaic or it doesn't work, you know. So it's just, and that's the other thing where people get fed up, is just to make a lot of these people who are not authentic, they just try to make quick buck, you know. And it's just don't really care. Okay, I sell the program. Is the person something going to do with it or not?
Right. Right.
And I know a guy. He was a sales lead for one of the a real estate problem in 570, one of the leading ones. And they did an analysis, and they said, I mean, they were pushing hard. They were hard salespeople. He didn't like it. He got out of it, and he talked about it. He's not proud all the time, but he made a lot of money with it. But he said they did the analysis, and about 3% of the people who bought the program was not cheap, actually did something with it.
Wow.
And the rest was just like sold it, do something with it, and either they never did anything with it, or if they did something with it, they just didn't get anywhere. But they didn't care because they sold the program. You know?
Yeah, their job was done.
No, there's some crazy data there. I've heard that from a bunch of different angles, that like it's really like 10% of any following is going to make meaningful action, and then only a slice of that 10% is going to actually achieve something with it. Yeah. But those are the people that we're all, I'd say, you know, you included, we're all sort of trying to impart little nuggets of wisdom here and there and share that for the people that do take it. Right. You know, and so it's a goal of mine and or ours to go on Robert Kiyosaki's podcast before he gets too old, because he was instrumental, you know, in our kickoff.
Yeah.
And I'm working to get with his real estate partner, Ken McElroy. And he's a neat guy. I feel like he's a good, authentic, he talks the talk, but also walks the walk and operates a bunch of multi. And that's where like her and I were actually at a date with Destiny when we lost our father a few years ago now. And we kind of wanted to regroup, like, what is our objective within growing the business and what is it that we really want to achieve? And we're having a ton of fun now building the team, but then also, you know, continuing to grow and get uncomfortable on the deal sizes consistently. And And then we wanted to make sure we reached back and educated and did some form of education. And so we landed on starting the podcast because it was like, well, we've actually been doing it to the contrary of most of the guys out there talking about it. We've been focused on doing it. Her and I've been obsessed with mobile home parks, trailer parks for 15 years. It's like, and now we have some really interesting lessons that we've learned. It's like, so let's talk about it now and meet fun people and grow this. And it's really more of an internal thing with our investor clients, if they wanted to go out and do it, or if they get interested in coming back in. It's fun. It really makes it a lot more fun when you're actually also walking the walk,
Absolutely. And I mean, it's fun. I mean, that's I think it's a good, as cliche as it sounds, but I think it's the best description. It's fun. It's fun to teach others. It's fun to be around like-minded people, and it's fun to still do deals. Be active and doing stuff. I can relate. Even though I'm in a different niche of real estate, but I mean the principles are the same.
So where let's do two more topics. I'm curious where you're looking and what you're finding just on like an opportunity zone, let's say, for rentals and cash flow, and then kind of where are you going from now, and what are you excited about in the future?
Yeah.
Like I said, I'm not as aggressive as I used to be. I mean, I was when between 16 and 20, I just bought as much cash I could get my hands on, as much I could refinance. And buy because I had that goal. I want to hit that number. I want to replace my income, my salary, and as soon as I replace my salary, I will retire from that job. And when I reached that, I'm still a lifestyle investor, but I'm not as aggressive anymore as I used to. But I still buy. I mean, I'm on a contract on 3 houses right now, so I'm still adding to it, but I'm also shifting things around. So most of my things are in Southeast, Mississippi, Alabama, Georgia. That's where most of my investments are. I'm buying the $150,000 to $200,000 homes, and they all rent between $1,800 and $2,000 usually.
Really? Okay, so teach me something about those locations. I haven't done a lot of research in that neck of the woods. So what's going on in the Southeast to yield those rents? Is there a lot of growth?
I feel like I still get the return. So usually what I look for is a 10% cash on cash return. So if I invest $40,000, I look for $4,000 cash flow for the year, rough numbers. So I buy homes somewhere, like I said, between 150 to 200, usually homes that need work. And build equity, the classical Burr strategy. You buy, you renovate, you rent, you refinance, so that's kind of the approach I have. And I still, like I said, you can buy these homes. I mean, I have a good network on how I buy. I buy from wholesalers, but I'm well connected within the areas I buy, and usually get first. The people I work with usually get like first tips on things, and because here's talking about relationships, because they know that if they send me something and I like it, I will buy it. There's not going to be like, you think about it. I'm going to tell them within 10 minutes, and they know what I like, so they know what they sent me is already fitting my box, and within 10 minutes they'll tell me yes, I'll buy or not, and I execute on it. So so obviously they like that.
Do you look for certain populations or demographic or certain areas too in your searches? What do you look for there?
I look for supply and demand imbalances.
Yes.
And I will explain to you, I have areas where I used to buy and I buy not anymore because there is no supply demand imbalance anymore, because they built way more houses.
Yeah.
Even though the areas are still strong, like where I live right now, I live in the Naples, Fort Myers area. I used to buy up to like 2020, 2021, still cash flow very good, but they have built so many houses since. Home price appreciated so much. Rents didn't keep up with the home price appreciation. I just cannot get the returns here anymore. Still great. I'm still bullish about there. Everything I have, rents great.
Sure.
but it's just not something I invest in. The areas where I invest is usually population growth, diversified industries, and just not that many new build homes. It's just not as attractive for different reasons. They might be landlocked in, might be not as appealing for some of the big home builders, different reasons. But usually it's the areas where they're still growing, a lot of jobs coming in, industrial jobs mainly, and then look for those imbalances and buy in areas that are desirable for those tenants.
So how do you, when you buy a property and then you renovate it and you keep it for a little bit where you rent it, is there a certain point or where the value gets to where then you sell, or do you long-term hold and refi out for a while?
Yeah, I rarely sell. I mean, I sell, but I rarely. I cash it. I refinance until I die.
Yeah. So, just keep rolling that equity. Yep.
and then your kids get a step up in basis if you have kids, right? It's like
yeah. No, it's. I think like we talked about earlier, it's like the long-term perspective. I mean, I don't think like a Samsel or a Trump, they didn't get there by flipping houses.
No, right.
Right.
It's they hold on to their assets for the long run.
Mm-hmm.
And I'm not the league with these guys, but I use the same principle.
Sure.
So I hold on to it as long as I can. And yes, and some of these, like some of the stuff I own here, technically, if I sell it, I would probably be better off selling it, take that money and invest it where I cash flow better.
Mm-hmm.
But I still cash flow because I had a low entry point, so I still cash flow.
Yeah.
So I'm okay with that.
How do you determine the discrepancy you were talking about on markets that have high demand and low volume of houses built, the supply shortage?
Yeah, I mean, it's just studying those markets. Some of it is naturally grown, like South Alabama. I used to live in South Alabama. My apartment buildings were in South Alabama, so I really lived there, saw it firsthand, and so it grew through that. Or you talk to other investors, and they tell you, hey, you should look into this market, and you explore it. Most of it came through because I lived in that area. Like I said, I lived in Huntsville, Alabama. Yep. I used to have a portfolio up there, and it's kind of naturally grown. Like I said, I'm not super aggressive. I mean, if I was more aggressive and said, hey, I want to own 200 or 500 houses, I want to have a fund, I mean, I would do it a little bit different. But as of right now, it's just I'm okay with what I have.
What's your goal? How many would you like to get to?
I don't have a goal. I get that question a lot, and people sometimes surprised with the answer. I don't have a goal. I just buy houses. I just want to generate cash flow because my belief is the more cash flow I generate, the less I'm controlled by my circumstances.
100%.
Okay, so if I can, so I'm just at times I don't even know. I mean, if you ask me how many houses on the number, I probably even could tell you the exact number. But if you ask me how much cash flow I generate every month, I can tell you a pretty exact number.
Well, so it sounds like,
I'm not really driven by number of units, assets under management, or whatsoever. So I, like I said, I'm a lifestyle investor, so I make a great living. I live in a beautiful home. I travel. So I'm okay just keep adding cash flow to what I have. And I don't. I know a lot of people have certain goals or whatsoever, but I don't have per se a goal of a certain number where I want to.
Well,
it sounds like it's more like you're focused on finding good deals. And you'll find a good deal, you'll buy it.
He's focused on the cash flow.
I make sure that deals work for me. And if they do, I execute. I buy houses. I bought last year. I mean, I bought probably, 12, 15 houses, but I also sold 5, 6 because I made some shifts in my investment thesis, but yeah. So I'm selective, and it's for me. It's just I don't want to create another job. That's for me the main thing. I don't have any employees. I have 2 VAs.
Wow.
But it's on purpose. Like I said, cool. I was burned out as CFO, and everybody has different strategies and whatsoever. And there's nothing right or wrong. It's just for me personally. I don't want to have employees. I just want to
Freedom, baby.
Cruise along.
Freedom.
And get the cash flow. Yeah.
So now you just really piqued my curiosity on what does it mean to be a investor in lifestyle? So like, what does that mean to you?
Yeah.
I want to make sure I understand that fully.
Okay. It's like, for instance, 2 years ago, I packed up my 2 dogs, took my truck, and I'm sure you guys know where Cabo, Mexico is.
I just got back from there.
South Florida all the way to Cabo, Mexico.
Wow.
Stayed there for 3 months and drove back. So I was on the road for 6 months with my two dogs. And while I did this, I actually made posts on LinkedIn about it, shot videos about it. While I did this, I still bought houses. I still renovated houses in Mississippi and was able to do what I do because I had the cash flow coming in and I had a strong network, or I still have, of contractors. I can assess a deal virtually, have boots on the ground. So I could do all this from Cabo.
Well,
which is really,
yeah.
really cool.
And what a sense of freedom, right? People would die to just be able to get in their car with their dogs and just keep driving. And you didn't plan to go for 6 months, but because you had the cash flow and you didn't have the pressure of getting back home to get to a job, you could extend your trip and that was okay. And you can work with VAs and still buy real estate and do what you do and love. And like, I feel like that's the essence of what everyone's trying to achieve, is like, that's freedom. That's really, you can do what you want and spend time with the people you love and still have the cash flow. I mean, everybody's trying to achieve that in some shape or form. So, congrats to you for figuring that out again, because it's awesome.
Again, this works for me. Everybody wants to be on the road for 6 months, but it's something for me. But
sure.
Hey, if your goal is to, I don't know, you have family in Europe, you want to be with your mom for a while, you can do that. If your goal is to, I have a friend who lives in an RV with his 2 kids and his wife for two years now, just driving around all over the country. The kids get the education of a lifetime, and it's better than any school. I mean, they have seen way more. These kids have seen more than I have seen. I've seen a lot, and these kids have seen more. So
experience.
So it's if you're able to generate that income and you become financially free, those are the options. But everybody's wired different, I mean, if you rather build something and want to build something, a legacy, there's nothing wrong with it, But I think real estate, that's the beauty about real estate, gives you these options where maybe one day tomorrow I might say, hey, you know what, I'm going to scale up. I want to be 200 houses. I want to create a fund. I want to have a fund with 500 single family homes. And then that's going to be my focus, So things can change, but I think it's the beauty is you have the options. Whatever fulfills you, whatever makes you happy, whatever's meaningful to you in your life, real estate allows you to pursue those dreams or those goals.
I agree. That's really cool. I like that everyone needs their own version of their structure and their targets and their goals, because it's true. Everyone has a different wiring, to your point.
And there's so many different, avenues and roads you can travel within real estate. You can do single family homes or multi or commercial. And so it's kind of like whatever works best for you and what you like that achieves your kind of outcome for cash flow and financial freedom. It's like, you choose it. And I think that's what I'm hearing you say. And it's true. I agree with you. Yeah.
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 Absolutely.
Awesome.
Well, awesome.
Anything else we wanted to cover? Anything else you wanted to share?
Yeah, I mean, basically, you asked me your next question, what's next? So for me, what's next is I wanna create a community for like-minded people. So what I created on LinkedIn, the way LinkedIn, I don't know how much you know about LinkedIn, but the way LinkedIn works is if you like somebody's comment, if you make a post and you make a comment on it, all your connections see that too, So I get a lot of messages from people like, hey, I love your content, but I cannot like it. If I like it, my HR department's going to see that I like
what the
ain't the theft,
right.
Taxation is theft or something like that, So, so I want to create a community. A lot of people that just want to do what I do, or people I know who do what I do, create a community for them, kind of build a platform where people can connect and build a network. I have a lot of people from Europe reaching out to me, Australia, Canada. So I just want to create a community called the Middle Class Rebels. Want to create a community for people exchange ideas and to grow together.
I love it.
Yeah. And do you have a shirt on? I think you have a shirt that says middle class rebels. I love that. You have the logo of breaking the chains.
Yeah.
Yeah. No, it's exactly. There's some to it because it has a lion head. So one of the things I post about, you guys are in the Tony Robbins group, so you kind of can relate. I post for the lions and for the sleeping lions. So for the people who already woke up and work on the things, but there's also a lot of people who like, hey, something's not adding up.
Yeah.
I just don't know. They have to go in handcuffs. They don't know how to get out of it, but they know something is not right. And so I call them the sleeping lions. So I post for the lions and the sleeping lions and breaking the chains because I grew up lower middle class. I grew up in a small 2-bedroom apartment with my brother, and my parents, they instilled to me middle class financial advice, which like a penny saved is a penny earned. The scarcity mindset. Which there's nothing wrong. It's still better to have a scarcity mindset than just blowing money, being in debt. But it's just not it's a suboptimal advice. But we in the middle class, we get instilled this advice. Like saving. But as you know, you're not going to get to the next level. You cannot escape. You can't save your way to prosperity. You have
Totally.
You have to build. You have to generate business income whatsoever. So I want to help people to break those chains and to live outside of the matrix.
I love it. Yeah, they haven't been red pilled yet.
Yeah.
Or whatever you want to call that version of the pill. Yeah. the awake lions. Okay, let's have some fun then.
Yeah.
On the wrap up of this whole thing, which is I've had a lot of fun getting to know you.
Yeah.
What do you think's going to happen? What's your predictions? Could you give me some fun predictions or what you'd like to see happen?
In terms of
the Fed, of rates, of macro kind of changes in the central banks or what?
I think the bond market is the one you should watch, but I think the bond market is wrong. So, because they're fighting the Fed right now, so interest rates actually go up, even though the Fed lowers the rates.
Yeah.
But the assumption is the economy is doing really well, unemployment is low, and the Fed is wrong by lowering the interest rates. And trust me, and the Fed, there's a lot I disagree with them. I think fiat currency, printing of money, is one of the evils of our society. But the part I agree with them is that actually economy is not as good as they want us to believe. So there's the unemployment. It's a very manipulated number. So I think the economy is not as good. So as the economy is not as good, so I think interest rates actually will go down. I think we saw a peak, and I think the bond market is already reacting and seeing that it's actually not as good as they think it is. So I think interest rates will go down. So I think it's going to be a good thing for real estate. I think with the Trump administration, a really significant cut in taxes. I mean, they're talking already about eventually abolishing the income tax, which is, I mean, I don't know if it will happen or not, but if it does, I mean, it would be unbelievable because, I mean, if you think about, and this is on LinkedIn, I battle all the time, like, oh, if we don't have income taxes, who would build the roads, and who would, you hate the police because you don't want income taxes? No, I don't hate the police. I just don't think my income should pay for all these things, and how much of your taxes goes towards the police. I'm more than happy to pay fire departments and police, more than happy, but how much of it gets wasted?
Exactly.
So they all talk. They have these hard arguments like, oh, who would build the roads? Who pay the fire department? Okay, that's fine, but let's cut all the other 95% of waste and garbage.
Well, and there's tax on tax, and then they don't manage the money well at all.
No.
It's corrupt. There's so much fat that can be trimmed, and so I love already like Doge came out on their X. It's like $420 million already avoided, in 80 hours or something. It was like,
I mean, I don't know if you saw, but 50% of federal buildings are empty.
That's a joke.
Literally empty.
Well, and to your point, there's sales tax, so it's like tax on tax on tax, and we live in California. Obviously, we play the depreciation game, the real estate professional game. Like we do all that. So we pay like the only little bit of taxes we pay is to California in the sales tax, because you can't, it's hard to avoid the sales tax daily, Yeah,
so. but the thing is, but like you said, you still get taxed. Property taxes, the sales taxes. Yep. There's you want to get a permit for something. There's always a tax on tax on tax. I mean, every dollar ultimately will be taxed to zero. Just the way it's structured, and what you have through that is you feed this ease, and it's just like. More people. And this is one of those reasons why I think the unemployment are fake and it's wrong. It's like the number one growth in employment for the last 3 to 4 years was government jobs. Yeah. So they borrowed money. We have a deficit going through crazy. And what they do is they hire hundred thousands of bureaucrats just shoveling paper, and then they're like, oh, we created jobs. Well, I don't know if I would consider them jobs. I don't know, but if you pay somebody, I agree on that part. But what's the value you get in exchange? So
totally.
But I think income tax. I think we will see some changes which will help boost the economy. I feel pretty bullish about the economy right now. I think there's a lot of good things that will happen, and I will keep doing what I'm doing, and kind of watch the Fed policy, the interest rates, and it's with a lot of things. I think that's, especially in California, what a lot of people don't understand is a lot of it is perception. It's when you come out. I remember when Trump came out the first time, he's like, when GDP at the time, this was still Barack Obama, GDP was like 1.5, 2%, and Obama came out and said, this is the new normal. We got to be used to it. GDP will always be 1.5, 2%. This is the new normal. And he came out like, no, we're going to be 4 or 5%. We're going to pick this thing up, And they're like, in the media and those politicians, guy has no clue. What an idiot. Blah, 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 blah. Never ran anything. Couldn't even run a lemonade stand, But they know anything about economy and business and whatsoever. And sure enough, we had at one, I don't know, quote me the exact number, we had 4% at one point, and I think the same with when with Biden and come in, it's like we got this like we gotta you create this perception, we gotta share more, we gotta be more equal, we gotta do this and that and pay more taxes and but now you have a guy who's like, let's go. And I think even though the playing field is still the same, but it changes tremendously if you go with a positive attitude or with a negative attitude.
Oh, and you could tell that shift.
With anything else,
that shift was palpable.
Totally.
And I know like a lot of people don't love Trump. Well, when he won, you could feel the energy shift. It was unreal.
To be honest, I feel right now the energy is even stronger than his first time.
Yeah,
I think people are even more pumped up now.
Having the contrast of Biden, Sleepy Joe, like he was like setting aside just who he was, he was such a bad leader. Like you can't argue that. Like he wasn't a good leader.
No.
And it was just like, what is happening? Like, am I watching some weird reality TV show where like we've elected the sleepiest person ever?
Where am I?
To be running the country?
It's like the Bidenomics, Bidenomics. What is he doing?
What is that?
It's like $2 trillion Inflation Reduction Act. I'm like, okay, you're spending more money to reduce inflation. I mean, it's just it's like you sit there. If you had like one class of economics in college, you like this doesn't even make sense. But the media, everybody like, Inflation Reduction Act, spend more, print more money, inflate the dollar away. And that's how we're going to reduce inflation. It's like this is bizarre.
So bizarre.
Super bizarre.
And it's just now it's like, I mean, don't get me wrong. I don't think we're going to reduce that $36 trillion. We'll not reduce that number, and it will still go up under Trump as well. I mean, Trump is a great businessman, but he doesn't understand economics too well, But that's I mean, that's the way it is.
Well, to your point, like it's such a massive mountain of debt.
Yeah.
That like to pay it down like or off it's a long shot.
We live in a debt monetary system. Every dollar you pay off of that debt will be a dollar you suck out of the economy.
Right.
Okay. So that dollar just disappears. Okay. It's not going to mean it just disappears. You pay off that debt, the digits go down, it just disappears. So there's no intention, as long as we have a Federal Reserve, there will be no intention ever to pay off the debt. The only thing that we're gonna do is we're gonna outgrow the deficit. So we will generate the GDP will grow, so we'll generate more growth, and by that 36 trillion or 38, what it's gonna be in another 2 or 3 years, will not be a significant
number.
There. So we kind of inflate the debt away.
Yeah, and make the dollar strong to where it props up our dollar against the rest of the world. Yeah. It's going to be interesting. I think there's some scheming going on with Bitcoin and like the Bitcoin reserve and like all the things they're trying to do there. I'm like, where is this all going? You know, and that's what one of the new conspiracies is, that he wants to bring all the Bitcoin in and inflate it up to sort of wash. It's like a new currency play. But then also what they're going to do is spread kind of computer through BlackRock and different stuff, basically inflate crypto to where it intermingles with U.S. treasuries and creates demand to tying it to treasuries. Because the issue, like what you're talking about with treasuries kind of departing from the norm, is that nobody's buying treasuries like they were on a global scale. And so I think there's some truth to that. You know, there's something going on with, obviously there's less bidders in volume on treasuries, which is why like it ran. Literally, we were in contract. We're trying to close a deal this week and we tied it up in October. And we knew we'd probably close it in January just so we didn't have to close it at the end of the year. And I mean, I figured maybe 20 bips of movement and boom, it went, I mean, almost a whole point from where we were at. And it's like, geez, this is an unprecedented swing. Yeah. Especially when the Fed comes out and reduces the SOFR rate. Yeah. And now Treasury balloons like that's, and it's never in the last 30 something years, it hasn't departed inside of 100 days. It's always trended with the Fed. And so there's a departure on US Treasury buyers.
I agree with you in general, but I think there was also a sentiment in the bond market that the Fed is wrong. You know, that because if you read just prior to the election, economy, Bidenomics, economy is going great, record unemployment, blah 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 blah. And you're like, man, we must be driving on golden roads here, as rosy as all sounds, you know. And then you look around like, my tenants are late on rent. The guy, my buddy over there, he can't find a job in 6 months, you know. So it's like you look around like, it doesn't look that rosy to me, you know. So I think the bond market was also kind of misled to some extent.
So you think there's gonna be more buyers jumping back into bonds?
Yeah, and also that's the beauty of being in the US dollar, you know. It's like I despise fiat currencies. I think it's awful to devalue, to rob people of their purchasing power. However, of all the ugly fiat currencies, the US dollar is the prettiest.
Yeah, you know? I agree. You'd be better off holding dollars versus any other currency, any other fiat currency. I mean, this is what I try to explain. People like, dollar this and dollar that. Well, I agree in general, but if you ever been to a third world country, they want to be paid in dollars. You know, it's like I know people in Turkey, when they get their money on Friday, they turn it into dollars. They go to the market, the money exchange, they turn it. You know, you go to Mexico, they want dollars. You know, so it's not as pretty, but compared to all these other currencies, it's still way more stable than any of the others, like pesos or whatever other currency you're in. So being that you've traveled a bunch, do you think the dollar is going to kind of maintain its reserve status for a long time?
Yeah, I think this is the other thing where people are wrong when they like, now the BRICS, they're going to create their own currency and everybody's going to flock to that one. I don't know. I don't see it. again, you're different countries. I don't know anybody who's like, hey, you want Chinese yuan or you want US dollars? Let's give me the yuan. You know, I don't know. Those words were never spoken ever in the history of the world. You know, so
exactly.
To your point,
the history of dollar.
If you don't travel, you wouldn't know that. Which I think that a lot of people that are saying like U.S. reserve currency status is gonna die, It's like, well,
they haven't experienced anything else.
Maybe in our lifetime, you know, but like there's going to be a lot of things that have to shift.
Don't get me wrong. The U.S. on the Biden has done anything they can to destroy the reserve status. You know, I mean, don't get me wrong. There's a lot of damage that has been done to it. You know, I mean, I don't want to get too deep into the politics, but the damage that has been done to the U.S. dollar in the last 4 years is just horrendous. You know, however, it's still the prettiest. You know, and here's the thing. The BRICS, okay, so now they're teaming up with Brazil and Russia and China. I mean, no offense to them. I'm sure they're solid countries whatsoever, but I don't want their currency, you know. And I don't think the people in Brazil really want their currency, you know. And if you look how much that inflated, and it's like, oh, it's going to be gold backed. Okay, so what does that mean? You're going to have all that gold somewhere in the treasure chest? And who's going to control that? You know, who's going to make sure, oh, you got $1 billion of BRIC currency and there's $1 billion or billion whatever asset value and there's $1 billion of gold sitting somewhere? I mean, who's going to control that? I mean, I think in theory it sounds great, but practical, I don't think.
And to your point, like those are all the countries that if you're outside of those countries, you're kind of weary of all those countries' currencies to where you.
Yeah, I mean, of the currencies, I'm not weary. When I've been to China many times, I've been to Brazil. I mean, phenomenal countries, phenomenal people, you know. But I don't. That doesn't mean I have to love their currency, you know. So I don't.
I love it.
Yeah,
that's awesome.
I think ultimately we have that reserve status and we're going to keep it for a while. And actually, one of the problems why other countries struggle right now, there's a dollar shortage right now outside of the U.S. and that actually impacts, like if you look at China right now, the 10-year treasury note in China is like sinking like a rock, and one of the problems they face is the dollar shortage.
Interesting.
So
it's all intertwined with the dollar for the mid to long term. I'm with you.
It's one of the things, to my point earlier, is you have to understand what's going on, you know, as a real estate investor. Like I told you, in 2022, when I got out of commercial, out of multifamily, I understood the impacts of the interest rates of did I expect it to be like it is now today? No. I mean, it's worse than I thought it will be, but I expected that values will go down. And in 2020, I went all into buying as much as I could, multifamily, single family, anything I could buy, because I knew the Fed will print more money. With that money printing, asset values will go up.
Yep.
So I want to be in. You know, I bought as much as I could. Any penny I could get my arms around, I bought as like crazy in 2020.
Yeah.
Which paid off pretty well. You know? So
wow.
Agreed.
Well, I love what you're doing and I love what you're teaching everybody. Keep going and pushing those messages out there, because I think it's so fun for people to listen to and learn from. You're doing awesome, and we really appreciate your time today chatting with us. So thank you for the information and having some fun. We'll hope to talk to you soon.
Same here. I enjoyed it tremendously. It was great talking to you guys.
Yeah, it's great to connect with you and meet you. And so, wish you the best. We'll stay in touch. I'll follow you on LinkedIn because I'm curious about your posts and stuff. It'll be fun.
Yeah, please do. And the next time, my girlfriend actually lives in Ensenada. So the next time, I spent quite some time in San Diego.
Oh, yeah.
So, we'd love to.
Stop by the shop and we'll say hi and hang out.
I will stop by the next time, probably in March. I will stop by.
Awesome. Cool. We look forward to that then, Marco. Thanks so much.
Thanks, Marco.
Have a great day.
Great talking to you.
All right.
Bye.
See ya.